Freshworks Incorporated was listed on NASDAQ in September 2021 and became the first company in its domain to do so. It successfully raised over $1 billion through this IPO. Today, we see more and more emerging companies aiming for an international listing since the beginning. So why do companies prefer to list in global markets? What benefits do they get from it? Let's try to answer these questions and understand the reasons behind the international listing of Indian companies. Well, after witnessing the very first season of Shark Tank India, there is something that we all surely understand about businesses and the process of fundraising. After the initial investment made by the founders, it is necessary for a startup to raise money further to run the company smoothly and enhance the business. As an organization scales up and is looking to raise substantial funding, a stock market listing becomes one of the most sought-after ways of raising long-term capital. Many Indian startups are aspiring to be listed on international markets, one of the well-known being the NASDAQ, National Association of Securities Dealers Automated Quotations, United States of America. As of now, Indian startups can list internationally only through the means of ADR, that is, American Depository Receipts, and GDR, Global Depository Receipts, which are basically financial institutions of the foreign countries acting as intermediaries in the process of market listing. Whereas in a direct listing, an Indian company can enlist itself with the stock exchanges of other countries without these intermediaries. This will decrease the overall transaction cost and increase transparency. However, this type of direct listing is still not implemented by the Indian government. So an important question arises in our mind: why are Indian startups seeking a global listing? The following are the main reasons for it. Startups are of various kinds with a lot of significant differences in the way they work and the target audience that they cater to. Thus, it is imperative that we give these startups the freedom to choose the markets that they wish to be listed in. Many specialized sectors like B2B logistics, genomics, biotechnology, and EV technology may be better served by global capital markets. The size, scale, depth and exposure of international capital markets is immense. Here is a fact for you. As of 31st December 2021, the total market capitalization of all the companies listed in India was approximately $3.6 trillion, while the comparable number for the US is 15 times, or $53 trillion. In 2021, India saw 63 IPOs raise a total of $16 billion, whereas the US had 6 times as many IPOs, 397, raising 9 times the capital, $142 billion. Listing in a foreign jurisdiction diversifies the pool of investors, which increases the demand for the company's shares and helps to decrease the cost of capital. Companies listing on foreign stock exchanges generally obtain more accurate valuations when compared to those of domestic capital markets. An international listing will allow the Indian startups to benchmark themselves against their global counterparts and raise the standards across the industry. It will also lead to more international talent hiring and will give companies a holistic global culture. This gives Indian startups a level playing field with their global comparables. Couple of examples which have taken benefits of international are Yatra.com, an Indian search agency as well as search engine, got listed on the NASDAQ in 2016, just a decade after its inception. Yatra was able to successfully raise more than $92.5 million in this process. The CEO, Dhruv Shringi, took great pride in this international listing and went on to make Yatra a leading travel brand in India. Similarly, Sifi Technologies is an early example of a successful international listing. This Indian information and communications technology company providing end-to-end ICT solutions was founded in the year 1995. The company played a pivotal role during the early spread of the internet and e-commerce in India. As a result, it was soon listed on NASDAQ in 1999. Thus, when Indian companies are listed on foreign exchanges, they gain access to a new source of financing, a more varied pool of investors, a larger investor base, international brand recognition, and other such benefits. As the majority of startups lack profit in the early phases, this could be a critical competitive advantage for companies that have greater growth prospects even if they do not meet the profit criteria that most Indian investors look for. Recent IPOs like Zomato and Paytm have demonstrated that even the Indian capital markets have the appetite to invest as well as understand the new, tech-based business models, so it will be interesting to see how this affects the listing decisions of companies in the near future.